I'm the 6th African to qualify for that Hall of Fame winner for the year 2022 by the African Insurance Organization. The African Insurance Organization is a body of all African insurance organizations. It's owned by governments, and their members are insurance organizations as well. They have this award for recognizing individuals that they believe or they think have contributed immensely or in an outstanding manner to the growth of insurance within Africa, in the African continent. I have been an insurance regulator for more than 35 years, which is the longest that we can talk of, not just in Africa, but outside of Africa. I think my journey is long in insurance. We were the first BCom insurance class in the University of Nairobi in 1983. After that, I joined the insurance industry as an underwriter, where I worked for about 4 years, during which time I qualified as a chartered insurance professional. And in 1986, the Insurance Act of Kenya was enacted. So from the year 1987, Kenya set up and established a department within the Ministry of Finance to regulate and supervise the insurance industry in Kenya. So the Office of the Commissioner of Insurance was set up and established in 1987. And I was one of the people who went to set up that office. And I rose through the ranks until the year 2001, when I became the Commissioner of Insurance. So from the year 2001, I now took over the leadership of the regulatory body in Kenya. So in the year 2007, the Insurance Regulatory Authority was set up, of which I went ahead to become the Chief Executive Officer, as well as the Commissioner of Insurance, in which capacity I served until the year 2017, when I retired. I have been involved a lot in the African perspective, not just Kenyan. I also sit, for example, in the Africa Foundation Council, something that is purely out of recognition of my contribution towards the African continental insurance market. It was a long journey. I was born in a very humble family. My father was a local pastor. And like many other traditional churches, the pastors did not have a salary. So we struggled as a family. We were 10 of us siblings. I was firstborn. And therefore, it was really a struggle to get me through school, get me through high school. After high school, I was not, because we used to go to Form 6. I mean Form 5 and Form 6 A levels. I scored very good marks in O level. I was called to an A level school very far in Western Kenya, but we were not able to afford to go. So I dropped out of school after Form 4. So I became a teacher. I taught for a while, and then I got some little money, and I was investing my salary the salary I got, which used to be 500 shillings a month, I invested that, and I was able to pay for my school fees in a private school in Form 5 and Form 6. It was Ruiru High School, and it has produced very many of the top people that actually you see running both the economy and the politics in Kenya. It produced serious alumni. Then from there, I went to do BCom in the University of Nairobi. That time, of course, being a student at the university was financially enabling, because they used to give us what we were calling boom. That boom, then I used to educate my siblings. First of all, I left the service because of age. I reached retirement age. So I had now to retire, and from government service and from the regulatory agency. So obviously I was contemplating going to Kibwezi, where I come from, and to grow mangoes and raise goats. I have some mango trees. Yeah. Just around the same time, I happened to be on attending a conference out of Kenya, an insurance conference, and I met one young tall man called Ezekiel Macharia. And then he asked me, "Oh, Sammy, why? We understand you're retiring. Why don't you come and join us?" So I didn't understand what I would do in an actuarial services provider or consultancy. And we left the discussion there until 3 or so months later, when we were able to agree that there was a scope for us to offer insurance advisory services and also regulatory services. That instead of going to grow mangoes in Kibwezi, which is an honorable profession, that we could still offer at Kenbright that advisory to countries and governments and even individuals who need that service. Where they will say, do not admit liability. Because that is a wrong starting point. I knock your car, and obviously I've knocked your car, and you are telling me not to admit liability. Why not admit liability? I think the industry has moved from that position now to make the services of insurance more friendly, because that is why you bought the insurance in the first place. Yeah. Because you envisaged a situation where you knock somebody's car from behind. There's this thing we call TCF, treating customers fairly, within the financial services sector. So how do you treat a customer fairly when you are telling them, don't do this, don't do this, and don't do this? Because then you are looking at your own, you're being self-centric rather than being customer-centric. And the insurance industry in Kenya has gone through that revolution now. IRA has tried to create reforms within the companies to change their view and the perspective of the customer. We also now are moving the regulations to bear a lot now, not just on prudential requirements, but also on conduct requirements. So the behavior of the insurance company, the way it conducts its business, the way it relates with the customers is coming into a lot of focus. In some places like South Africa, there is purely a conduct regulator whose work is just to see how companies are conducting and behaving themselves. Nothing more than that. So that way you see it really gives the comfort not just to the consumer, but also the providers know that they are being watched, their behavior is being watched. That is going to be a game changer. And IRA Kenya is also now moving to seriously focus on conduct of insurance providers. Pricing of insurance products is not supposed to be guesswork. For example, how do you determine what is the appropriate premium rate for somebody who wants to buy an education policy for their child, or they want to buy an annuity? So actuaries have impacted on the pricing of the products. In fact, if you want to introduce any product into the market, it must be approved by the IRA. And the IRA will not approve it without an actuarial certificate. So this gives the comfort to the IRA and also to the consumers that this product, number one, is properly engineered. It has the right characteristics, and it is properly priced. It's not guesswork, or it is not a copy and paste, because a lot of products in many African countries, including Kenya, were just copied and pasted from UK and India. But we are not in UK and we are not in India, or South Africa for that matter. We are unique in our environment, and therefore the products that then are sold and marketed must meet our local requirements. They must address our local requirements, rather than India or South Africa, where those markets were developed long ago, and therefore there was this tendency of just reproducing, including the wording. You find that the policy contract uses King James English. Now, really, King James English, you can't understand, I can't understand. Even the Bible has now been translated to a more friendly version. So that has been one of the challenges of the insurance industry in Africa and in Kenya as well, in particular. So the actuaries have been very useful in determining now these products, particularly in terms of their offering as well as their pricing.